Hello, I'm Juliet Sarli. In this week's edition of IG Macro Intelligence, we take a deep dive into Washington H Soul Pattinson. Investment conglomerate Soul Patts has lifted its dividend by more than 9%, despite a 28% drop in full-year net profit to just under $500 million. Soul Patts holds significant stakes in manufacturing firm Brickwork, as well as coal miner New Hope and telecommunications provider TPG. Revenue for the full year rose 32%, while its net asset value grew nearly 9%. Soul Patts declared a final fully franked dividend of 55 cents per share, up almost 8% on last year's final dividend. The boosted final dividend saw total dividends for the year rise more than 9% to 95 cents per share fully franked. Here's Todd Barlow, CEO of the company, speaking to AusBiz.
I think about the market growth of dividends across that 3-year period. The market has only grown dividends at a 0.9% rate. So we've done particularly well in really stepping up our dividend. But if I look forward to another year and we're in the fortunate position where we can increase dividends again next year, that will be 25 years of continuous growth. That will put us into the class of the dividend aristocrats, which is a global thing for companies that increase dividends every year for 25 years, and will be Australia's first.
Soul Patts continues to diversify 121 years after listing. The acquisition of Milton Corporation in 2021 has proved fruitful for the business, helping to grow its overall portfolio by 13.5% per year over the past 3 years. CEO Barlow confident of further acquisitions.
I think we'll continue to be active. I mean, last year we deployed $2.8 billion into new deals and new assets across the portfolio. That might be a little bit more active than what we expect, but I would suggest that we're not going to stop investing. We're still seeing really great opportunities coming to us, and there's always a great opportunity for us to regenerate the portfolio by selling your least favourite thing to fund the acquisition of something new.
Well, Soul Patts shares have grown along with its dividend payments. Over the past 5 years, shares have risen almost 68%, a better return than the ASX 200, which has risen around 27% in that time. But year to date, Soul Patts shares are up just 6%, underperforming the 8.5% gain in the broader market. On a longer term basis, the 200-day moving average is trending upwards, highlighting longer term investor interest in the stock. Meanwhile, Soul Patts has a relative strength index of 72.9, which has penetrated the overbought line of 70, suggesting the price gain of almost 5% in the last couple of weeks is unusually high. Its previous RSI was 67.6. Now, a few analysts cover the stock. Refinitiv data shows 2 buys with a target price of $35.60, a gain of 2% from current trading levels. Morgans has an ad on the company saying the management team continues to deliver both organic and inorganic growth over the long term. ASX TradeWatch data, meanwhile, shows investors in Brickworks need to proceed with caution. The medium-term picture is solid. However, other indications are mixed, as the 200-day moving average on the stock is neutral and the 20-day moving average is trending lower, suggesting a bearish outlook. Brickworks shares are up 5% year to date and have risen around 16% over the past 12 months. And that is your IG Macro Intelligence for this week. We'll see you next week.